Welcome back to the Dividend Diplomat YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. I have a big question out here to talk through today with Lanny, the community, and just work through something. Is it time for me to sell this dog of my portfolio, this stock that is down 28.5%? I'm staring a nearly $1,000 loss for this stock, but the yield is a juicy 7.22%. Is it time to dump this loser? Let's talk through it.
Is the juice worth the squeeze, guys? Smash that subscribe button. Give Bert the Hurt and Lanny a nice thumbs up because we are here and Bert's got a little dividend debacle on his hand. Is he currently sitting in the yield trap? And should he now use this as an opportunity to exit that trap and put it into some more lower risk, higher growth prospects?
That's right. So what company are we talking about today? Walgreens, ticker symbol WBA. A month ago, we
Walgreens.
talked about CVS. That was one of my top stock picks. They made a turn for the better. They're feeling like they're coming around. They're seeing some encouraging results, positive momentum. Walgreens, not so much. The news hasn't been that great. The company has continued to struggle. Going through their October earnings release quickly, even though they've seen year-over-year growth in all their segments compared to last year, they have what, 35 billion of total revenue combined between their three segments. US retail was 27.7 billion. International, which is really Boots Alliance of the piece, the 5.76 billion. US healthcare is 1.97 billion. Even though they saw growth year over year, quarter over quarter, they saw another decrease in all segments but Boots. So it wasn't the best top line news here for Walgreens in that latest earnings release.
And it seems like internationally they're doing very well, though, overall, which obviously is that Boots Alliance piece, right?
Mhm.
And
Yeah.
yeah, I know that there's the big debate right now with Boots Alliance. Bert, are they planning on offloading the Boots, the B and the A in the WBA ticker symbol for Walgreens, which trades at 26.60? They are considering offloading Boots. Looks like it's what, close to a $9 billion valuation for the entity, possibly.
Yeah, and that's the thing. They always talked about selling off Boots, right? They tried this a few years ago, if I recall, and then they just held back on it. Now that it's starting to heat up again. So yeah, that would be a huge cash windfall for Walgreens, which could be very pivotal to help them pay off debt. But the interesting piece from this, though, is what are they selling off? So are they selling off the one piece that's functioning very well, that's seeing quarter over quarter, year over year growth, and is one of the strongest earnings engines for the company? Do you sell that off, take the cash and pump it back into the other segments that are underperforming? Or do you hold on to Boots and you keep the company intact and help use the earnings to prop up the results? It's a tough decision that they face.
Or do you just, put your feet in the boots and lace up? I mean, there's a lot of debate here, guys. And by
Yeah.
the way, how many of you guys currently own Walgreens? Let us know right now in the comments. And
Yeah.
let's see what your take is right now on the Boots Alliance offloading. Will it happen? Do you think it's right for business? Do you think, in the words of Triple H, is it best for business? My wife and I also own Walgreens. It may not be as much as what Bert and his wife own, which, Bert, it looks like you guys own close to, what did you say about, you have around, what, 80 shares?
Yeah, 80 shares combined. So the market value is about 2,100. We're staring about
100 shares.
no, we're sharing about a loss here, about $970. So we put in a little over 3,000 into Walgreens. It just has been underperforming since day one in our portfolio. So that's the question. It's 2,100 is a pretty substantial amount of money, and you can invest that in something else that has a much more promising outlook.
Pokemon cards.
Yeah, you could. That might have a more promising outlook. Although, let's be real, the market for that hasn't exactly been going positive lately. The card values have been slashing. Or do you stick around for the turnaround story for Walgreens? Do you sit here, you collect a high dividend, you collect a 7% yield, 6% yield while in these valuation ranges, and then just hope that the turnaround is going to happen and you can salvage breaking even on this investment? That's really the core of this decision here.
That's the big debate. And, I'll just for the S's and giggles here for the video here for the channel. Let's see here. My wife does own, oh boy, Bert, you guys may only own actually 80 shares. My wife actually is holding tight at 115 shares. So
Oh,
let me reverse
whoa.
what I said there. So she's got
After you were talking smack
yeah,
about how we own more than you, here we are.
what I should be doing is selling some covered calls on this bad boy to get out.
Well,
Um,
you need
yeah,
someone to believe in Walgreens for that to happen, right? Okay,
Walgreens, guys,
yeah,
is there a turnaround story? Is there an intel
yeah,
story behind Walgreens?
yeah. And that's what this is what kind of story do you believe in? So as I'm going through my decision, they're at 2660 now. Their market value is 2100. Do I tell myself I can hang around for $30 per share, right? Like, so if it goes up to $30, my position goes to 2,391.03. I only lose $700. Is it worth waiting for the extra $270 for the upside when you have some downside risk here for Walgreens, who again has been a very, how was I going to say? I was going to say they've been a very strong underperformer. I think I want to say they've been a very consistent underperformer over the last few years. Is there enough upside to offset the downside risk?
Right. I mean, obviously the CEO, which is interim CEO, uh, is stating that the performance does not reflect Walgreens' strong assets.
Sure.
They have planned cost reductions too of $1 billion, and they're lowering capital expenditures by another 600 million. So it's 1.6 billion less cash right now going into 2024. And it looks like they're really focused on the U.S. healthcare segment and the profitability there, and bringing on their new CEO, Tim Wentworth, who has prior healthcare experience. So, they've got some plans in place to at least start trimming some fat at Walgreens, which I believe, did they not announce that there's a lot of store closures
Yes.
as well coming up?
Yep, they did. They announced they're going to be cutting costs that way too. So it's a true cut cost, new management team, sell the valuable assets, get the cash in the door, and see if you can revitalize what you can with Walgreens. That's the vision that you're buying into. And can it happen?
Yeah, I think they announced 150 stores by the end of August of 2024. So they have about 9,000 according to this article that I just pulled up. So it's not a
That's
lot.
no, that's a small amount. Save on some rent expense. It's not like a significant holy cow, we're cutting 30% of our stores. We have to cut immediately.
No, I mean that's kind of a blip on the radar. 150
Yeah, I
stores.
mean, I think I have 2 to 3 Walgreens within a mile from me, and one of them's just empty all the time. Like one of them's just empty because there's another one close by, and it just doesn't need to be there. So that could be one of the ones that you could easily shut down.
Yeah, I like where you're. I mean, again, so I think they're trying to put some things in place to improve performance. Bottom line is if you're walking into this entity, you're like, okay, how do I help the top line? How do I help the bottom line? Let's focus on both. With somebody that has that experience, is that enough? Is that enough
I don't know.
for us, you, Bert, me included, us as shareholders? Is that enough to continue to wait to see if the price comes back?
Yeah, I don't know. It's a great question. So let's just run them through our screener here with just show the 3 metrics on the screen. I'll just quickly rip them off. We said their price is 26.60. The earnings per share is 333. PE ratio is 8. Their annual dividends $1.92. Payout ratio is 57%. They've increased the dividend. They're nearly a dividend king. So they have increased their dividend for a while. We'll give that one to Walgreens, but the growth has been terrible. It's 2.71%, and they have a 7.22% yield. So do the metrics plus the new management team and the cost reduction plans buy time for people like us to hang tight in their Walgreens position and maybe wait to sell when the price increases, or just keep holding when there's a turnaround story like there was with Intel? That's the million
Yeah,
dollar question.
down 28% this year. My wife just actually got home from CVS a little bit ago, and I'm sure if her health insurance sent prescriptions to Walgreens, she would more than be happy because of how bad of an experience she just had at CVS. So is there some stranglehold within the insurance carriers? We haven't pulled back those layers. I mean, Bert, this this stock yields over 7%. You're paying for, you're getting, it's the risk to reward. You're getting rewarded to hold the bag right now. That's
Yeah.
7.22%.
Yep.
I know we've always traditionally dividend reinvested, and I'm sure we're not changing as of right now.
Yep.
Um,
Yeah.
when is that next dividend too, by the way? Let's give a
That,
quick announcement out to the community.
yeah, that's a
Next,
great
yeah,
question.
next dividend's coming in March. So
Okay.
the next
So
X date's probably the third, fourth week of January.
yeah. And that's the thing. It's like, do you drip and just kind of see how this plays out? Because with owning nearly 80 shares at $1.92, we're getting $150 annually from Walgreens. And when you take the current share price, that's an extra nearly 6 shares per year. So we're getting a significant amount of drip at these prices. The question is, what are you dripping into? And that's the question I don't know. There's another interesting caveat here, Lanny.
Hmm.
You sell it, and then what? Are there a lot of cheap stocks in this market right now?
Ooh, no,
So
there's not. But you could always go into Maine.
yeah, it would be a thing, and you ask yourself, do I prefer your Maine in the long run or Walgreens? I think that's an easier answer. Do I do it to take a little bit off the table to go to maybe a nice 4 to 5% yielder like a T Rowe Price or another great dividend stock? Possibly. Do I even take a little more yield off the table and add to an SCHD position? Just keep it simple, go right the ETF route. That's the question. I don't have the answer yet, but Walgreens is kind of on the chopping block for me. I don't really feel it. I don't feel the turnaround story. I don't know.
Yeah, no, I mean, I don't disagree.
You
It's
This feels more AT&T to me than it does Intel.
yeah, especially if they spin off Boots, the dividend's gonna change.
Yeah. And if you ask me what would I have changed my decision with AT&T, I don't know, maybe, but it hasn't the turnaround story hasn't played out how I wanted to. And I feel like I'm heading down that road here with Walgreens. It really may be time to give this consideration, take the loss, reinvest it into something I feel much better about.
Well, the question now is, community, what would you do? What are you doing with your Walgreens position? I'm sure a lot of you have already trimmed it back when they were a lot higher. Let us know in those comments and make sure you subscribe and like this video. Let's keep going and keep pushing for dividend investing and getting to financial freedom here.
And remember, if you're not with us, you're against us, Jack.
That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.